Good morning all and welcome to today's video. So today I have three pairs on watch and those are dollar Swiss, pound dollar and euro dollar. So I've just taken pound Swiss off of watch, pound dollar and euro dollar doing what I was anticipating yesterday. But pound Swiss is just sort of messing around at the moment and Kiwi dollar seems to be forming something slightly different. I'm going to talk you through my thought process on that very briefly because I think it might be helpful to one or two of you. So we just load up pound Swiss first of all. So on the higher time frames, I'm just going to run through this very quickly. We have this impulse correction potential continuation to push higher. We have this 1, 2, 3, which taps below this sharp hook point here, which I was talking about yesterday. I'm just going to get my forecast off of the charts. Okay, where is the forecast? There we go. Get that off of the charts. So I was anticipating potentially that kind of, if we just put the forecast back on the charts, an impulse correction continuation to push higher once we broke above here. But as you can see, price is now back below here. Now, this could be one of two things. This could be some kind of, where are we? This could be something like this. If we get the paintbrush tool on, something like this, and then this becomes the middle section. We push up. This could be a larger flag to push lower. Okay, I don't think it is. The structure is not dictating that at the moment because we have that 1, 2, 3 which taps into this area, and we also have a 1, 2, 3 last leg. Normally this would indicate a move to the upside. However, as traders we have to be neutral. If we do form something like that, this larger bear flag, then we may be coming all the way down to here. That's not what I'm seeing at the moment. We do have to factor in that this correction is very wide relative to this move up, so it's not impossible. This could also be, just to touch on it, I've spoken about before in the past, when a higher time frame liquidity point such as this, when it's on the higher time frames, what this could be, or the analogy I like to use is that when we have the higher time frame liquidity points, if you think of this as like King's Cross Station or whatever the major train stations are wherever you live, price will often hang about in these areas for longer than it does on the lower time frames because more people are trying to get on and off of the train. So this could still push higher from here, but it may be coming back down to collect more orders because of the fact that this is such a high area of value for a buy. Okay, so I kind of think of these higher time frame liquidity points as like King's Cross Station or Paddington Station. I'm from the UK, so those are the train stations that I kind of think of, the major ones. And I kind of think of the lower time frame ones as the kind of minor train stations along the way, where if you've ever been on a train, very few people, if any, get on or off at those train stations. Okay, so when price gets to these areas, people think it's just going to go. If it's going to move to the upside, often it just hangs around for a while. So this could be that larger bear flag that I was just talking about to push lower, or it could be just collecting more orders. I'm not going to try and guess what price is doing at the moment because there's not enough structure for me to work with to indicate one way or the other. Okay, so I'm just going to let that. We don't have to know what the market's going to do next. We just have to know what we're going to do. So I'm just going to let this price do its thing and then come back to it this evening and just see what price looks like, or come back to it next week if there's been no development. So that is pound Swiss, just leaving that alone for the moment. Kiwi dollar, I've just taken this off of watch and I shall explain why. So on the higher time frames, you remember if you watched my video that we broke below here, we were forming a correction, we pushed below, we corrected below this low, giving me a clue that we would likely take out this low, this near miss to here. Okay, just want to analyze. I'm not going to go into too much detail because I don't have this on watch today. But so we had yesterday, I had my area of value here. Okay, and you might think, well, why have you changed it to there? I shall explain. If you watch yesterday's video, I said that I thought that we may get a little 1, 2, 3. So I did my video. Where was it? Where are we today? Wednesday. So yesterday morning we were about here, and I said that we may get a 1, 2, 3. Here we go again. We may get a 1, 2, 3 like that, which has a 1, 2, 3 middle section, which breaks above and then pushes down. And then I would be looking for a flag, which is what I was looking for. Price just sold off. Last night I did do my forecast, and I was anticipating something like that. However, I was mindful of the fact that price had moved down quite correctively all in all. And the reason that's significant is because we'd kind of near missed this sharp hook point. So we did have, if I just take that off of the charts ever so quickly, I think this might be interesting to one or two of you. We did have this we did have this 1, 2, 3 middle section. Okay, give me a clue that potentially when we got this here, this may be enough for price to move to the downside. So we had that 1, 2, 3 within that potential 1, 2, 3, which had a 1, 2, 3 middle section. However, we did near miss to this sharp hook point. And the other thing is that if we just look at this middle section, okay, the third wave, so from here to here, was significantly shorter than this move from here to here. And normally the continuation out of an impulse correction continuation, so this leg here would be of a similar length to this, giving a clue that potentially this overall move is not a completed piece of structure. So these are just things that I'm factoring in, okay? So what does that mean? Well, what that means now, if you look how price scooped back up, the question I ask myself is, why is it scooping back up? Well, likely there's still orders above price. If there are still orders above price, given that it's tapped into this area, then the orders are likely here, which is why price moved up sharply. So what we can do now then is take this off of the chart. And what we may be getting now is we may be getting a move down to here to then break the high, to then break back in and potentially flag, which is what I'd be looking for. Obviously, this would not be ready by the end of the day if you just count the candles, given that we're actually on the 15-minute chart. But if you just look at that, that may be something and that may be happening, because then we would have a 1, 2, 3. So a 1, 2, 3. Okay. This would become a middle section within this 1, 2, 3. And if we just analyze the middle bit, we would have a 1, 2, 3 within this 1, 2, 3, which then breaks the high. And then if we measured this impulse, okay, and we said that this was an impulse correction continuation, and we measured that from here, that would take us to just above there, and then we could be looking for a push down and a flag to get short, okay? And then we would also have that 1, 2, 3, okay? So these are just things that I'm factoring in. So that may happen, it may not. We should see, but that, if you just count the candles at the bottom of the screen, that would not be ready by the end of the day. So I'm just going to leave that alone, let it do its thing. But I thought that might be interesting. The thought process might be interesting to one or two of you. But anyway, dollar Swiss, my top pair on watch today. We do have these near misses. I talk often about how these near misses often get filled. The high that they fail to tap into often gets filled. But you can see we are well and truly in a run of momentum to the downside. And the key bit for me here, this is kind of just a little range play. If you just look at this, we have this 1, 2, 3. So on the higher time frame, although we may be coming up to take out these near misses and potentially take out this high, what we also have is this we have this 1, 2, 3 touch structure, which taps into this area of exchange of liquidity, which price sold off from last time around. Within that, we have this 1, 2, 3, and this massively overextended third wave, okay, which then breaks back above here and gives us that 1, 2, 3. We tap into that area. If you notice here, what happens? We tap into that area, but we don't really break above it. Price scoops back round to collect more orders, and then we go to the downside. So this is just a simple range play from here. Where do you think the bigger players will be getting out of their positions? If they are getting out, it doesn't make sense for price to just suddenly reverse to the upside from here. If the bigger players are getting out, if we just zoom out to the weekly as well, they're likely going to be we're well and truly in a run of momentum to the downside. They will likely be getting out here, okay? And we may keep going to give us this kind of 1, 2, 3 down to here, which breaks this low, given that we have this 1, 2, 3 wave middle section, okay? So this is just the thought process. And if we just take that off the chart. So with that in mind, what I'll be looking for today for this potential impulse correction continuation, we do have this flag is forming halfway within this range. If we just measure it, if this was an impulse correction continuation to push lower, that would likely take us down to this area as well. So that ties in nicely. You can see that the sequence isn't great. We have some of these sharp, steep pullbacks, these scoops that I've talked about in the past. But what we also have, and that is partly why I wouldn't take a risk entry on this pair where we essentially call the top. But what we also have is we have this impulse correction continuation within this potential impulse correction continuation. And within all of that, we have an impulse correction continuation middle section. And if we just measure that from here to the base and then measure we get the impulse correction, and then we measure the last leg that takes us down to here. So we've fulfilled that move, and what we may be seeing now is this impulse correction continuation to push up. We may trickle around for a little bit, push a little bit lower before breaking into that area. Okay, so we may see something like this until, let's say, maybe about 11 o'clock, and then we push up to there as the New York session starts, and then push down and flag and go. And then we would also have this 1, 2, 3, where this acts as a bit of a middle section as well. This kind of 1, 2, 3. Okay, so this is just the thought process. And with that in mind, what I'll be looking for from this pair today is the following. So if we tap into this area, with all things considered, what I'll be looking for is a push down and a flag, and then I'll be looking to get short either on the break of the flag or within it, and then I'll be able to manage it down to the low of the structure for something in the region of 5.5%, obviously dependent on the size of the flag. That would depend how wide my stop loss actually was. Of course, if I could get the risk entry within the flag, that would be something in the region of 10%. And of course, if it keeps going, if it breaks the low of the structure, which is what I would be anticipating, then it could be all systems go for that higher time frame move to take out this the low of this range here. So that is dollar Swiss. And of course, I have an alert set at the area value just below it. If that doesn't trigger today, then I will not be looking to place a trade on this pair at all. So this one, if we just look at this, so I said to you yesterday that we had this on the higher time frames. We kind of had this 1, 2, 3 with a 1, 2, 3 middle section, which breaks below all of this, catches people the wrong side of the market, and then we push up, and we have this 1, 2, 3 wave move, which then scoops back down potentially to tap out some more orders for a move to the upside to take out this near miss here, which failed to tap into this high. Okay, you can see if I just drill down, you can see this 1, 2, 3 section there, which has a 1, 2, 3 middle section. So price doesn't necessarily need to come back down to here because this is a completed piece of structure. But what we also have just sat above that is we have this sharp hook point, which is slightly more visible on the 4-hour chart. When they're not as visible on the higher time frames, I do tend to put these slightly lower down on my list of pairs, but that doesn't change the mechanics of the market. We have a sharp move down, but followed by a sharp move up, giving me a clue that there's a lot of liquidity in this area. We then have this 1, 2, 3 wave move with a 1, 2, 3 wave middle section, which is slightly more clear on the 1-hour chart. So let's drill down to the 1-hour chart, which taps into this area of consolidation here, which price sold off aggressively from last time around. Okay, we then push down, and then we have this impulse correction continuation. We have this impulse correction continuation to potentially take out this low and this near miss to this sharp hook point here. Okay, so when we near miss to something, it increases the likelihood of us taking out that low. And I said to you that I thought that we may break a little bit higher, break above this before breaking back in, because of how much volume has built up in this range here. Okay, and I said if we just measure the range, roughly speaking, from here to the break, and then we measure it from the break up to here, that would take us up to here. Okay, and that's exactly what happened. So normally we don't move too far from the hook points, but sometimes we do if a lot of volume is built up in the kind of middle section within a piece of structure. So with that being said, and all things considered, and being mindful of the time as usual, the 20-minute time limit that I have on these videos. So what I'll be looking for today is price to correct, because this would be quite a little bit disproportionate relative to the move down which has preceded it. I will only be looking for a risk entry within the flag, because then if price comes up to form something deeper, so say it did something more like that, then I will be able to manage this down to these lows, or manage it if it came back up to form something slightly deeper. And the other reason why I'm only looking for a risk entry within the flag is because if I measure this on the break, if we got something like that, I would expect something a little bit bigger than what we've got now, and I wouldn't be able to manage it down to the lows for 3%. So when we've got a major piece of structure like this, I want to get 3% profit, so that I can actually, if I'm trailing my stop, actually walk away with kind of at least 1%. And in this instance, I would probably walk away with a break even. So there would not necessarily be any profit potential. So what I'm looking for is just a slightly larger flag. Again, this may not be ready by the end of the day. If it's not, that's fine. But I'll be looking for the risk entry within the flag and looking to manage it down to these lows for something in the region of 6%. We will see. I have an alert set just to see if we can push down, because this looks like an undeveloped piece of structure to me. So we may get that kind of move down there and a move back up to give us that kind of 1, 2, 3. If you just look at that sharp point there. But we shall see. I'm just going to let price show me what it wants to do, rather than trying to guess at the moment. Guess how this flag may develop, if it develops at all. So that is pound dollar. On euro dollar, it's the same sort of story, but on euro dollar, if I just unhide my forecast and do this very quickly because I'm running out of time, we've already tapped into the low. Okay, so that is, it's not a negative as such, but price doesn't necessarily need to come down. But you can see that we do have this 1, 2, 3 touch structure. Price is sold off aggressively, as I was anticipating, and we may be just be coming back down for a double bottom before that longer term move to the upside, because of the fact that we have this 1, 2, 3 there. Do excuse the drawing, I'm running out of time. With a 1, 2, 3 middle section, which taps into this last exchange of liquidity there. Okay, so I'm having to do this a little bit more quickly, because on TradingView, where I'm doing this, we only have 20 minutes, a 20-minute limit per video. We have a near miss to this low that's been taken out, but what we do have, we have a 1, 2, 3 with a 1, 2, 3 middle section, which taps into this area of consolidation, washes out all the stop loss orders and limit orders, and then pushes down aggressively. Okay, so as I said, it's not about being right. Some of our forecasts do what we're anticipating, some don't, but some do what we're anticipating, just not in the way that we were anticipating. Okay, so it's not about being right. But on this pair, what I will be looking for is the same thing as with euro, as with pound dollar, but again, a risk entry within the flag, as opposed to a reduced risk entry on the break. In this instance, it's not so much that I couldn't manage it to the low of this structure. It's because of the fact that we have a trend line here. Normally, I'm not bothered about trend lines. We just take that off the chart. Normally, I'm not bothered about trend lines, but when a trend line such as this is visible even on the higher time frames, so on the 1 hour, the 4 hour, and the daily chart, we are likely to get some stalling in this area if we push down to that area. So rather than look for something like this where I wouldn't get a great risk to reward down to that trend line, I'll be looking for that risk entry within the flag so that I can walk away with some profit if price stalls in that area. That's what I'm going to be looking for today, folks. I hope you're taking some value from this, and I will be back tomorrow with another video. Thank you very much for watching.